You're probably wondering, what do I do now if there is a recession, many layoffs, and maybe this is the time when I start my new venture. I had this dream idea, and this is the time this is gonna take off, right? So what do I do to make this idea happen and your dream idea turn into a real business? We're gonna discuss step-by-step recommendations for the key things to do for new entrepreneurs when they start a new venture from idea to real business. And here today with me, I have Sharon Huang from Tao Ventures, and she has a lot of expertise on starting companies, and she gives advice to startup entrepreneurs. So watch this video to the end, and you'll learn how to start and grow your new venture. Hi, Sharon. Great having you here, and we look forward for the talk. Please tell a little bit about yourself, and let's get started.
Yeah, hi Daniel. Thanks for having me. My background's in CSAI and epidemiology. Also worked briefly in pharmaceutical companies, as well as was a software engineer before joining Tao Ventures. Based out here in New York, while Tao's headquartered in Silicon Valley. Really nice to chat with you today.
All right, fantastic. So Silicon Valley gives a lot of expertise and experience for entrepreneurs and investors. And getting started, I have an idea. Then what? Like, what do I do? What would you recommend?
Yeah, absolutely. A lot of people are now kind of in the stage where they're kind of they have the freedom to explore what their idea is. I think the biggest thing that as an entrepreneur starting out, you should really kind of go out and once you have that idea and test your hypothesis. So whether that looks like going to the people that you are providing a solution for and seeing if this solution would work or would they use it, or kind of iterating on something that you're building. Those two things are really huge in starting out. The biggest kind of factor that you really want to look out for is to build and fail fast. And you probably, people probably have talked about this quite a lot, but it is really, really important to actually build and to do something instead of kind of sit there and theorize. Because the quicker you go out there and find out if your solution works or not, the better your product will iterate and become an actual product that people out there want.
All right, fantastic. So we have a fast iteration, fail fast, and talk to your customers. And in my opinion, talking to your customer is the key thing because this is the exact source of information for you when you really want to build something your customer wants. If you don't ask your customer, you probably will never succeed because customer wants something and you don't know about that. You never ask. So why would you succeed? Okay, great. So how do I raise from this?
So really the next step when people think about building is raising. So in order to build a product and to send it out and package it to customers, whether that's in pilot or just to see if your minimal viable product works, you need money. And so the next natural step is how do I kind of go about raising? And who do I raise from? So when you think about raising, if you're just starting out, you probably need a small amount of money, and that can come from either funding of your own. Many people aren't able to do that. Very few people can kind of pay out of pocket to bootstrap something, or it can come from family and friends. More likely than not, there are also angels out there, angel investors, who are willing to kind of write checks based off of the idea that you have. So finding these people is kind of key in order to get the sort of funding that you need in order to build your product and take the next biggest step in scaling. How do you kind of go about raising though? And how do you convince these people to write you those checks is kind of a whole nother story. And we can get into that a little more later. But I think these kind of three groups of people are the people you probably yourself, your friends and family, and angel investors are the people you probably want to look to in order to raise your first round of checks. And this is what we call the pre-seed round. And Pre-seed round, just as a general term, is money that you get before you have sometimes before you have a project and when you have an idea and somewhat of a clue of what your solution or your product will look like.
All right. So if you're at the stage of pre-revenue, at the pre-seed stage, and you need money for your idea, you're probably looking to find it from investors. But not every investor is ready for that, as Sharon is saying. So you probably want to do a bootstrapping from triple F, family, friends, and fools. And these are the category who are not professional investors, but they're willing to invest in your idea to help you take the next step forward. And probably they might, in most cases, they will lose the money, but this is how the industry works. So, this entrepreneurs are learning by doing and keep failing, and you probably take the next step forward. Fantastic. Then how much time should I be spending on this? Should I work full time on this idea, or like how would you recommend to approach that?
Yeah, I mean, it's really hard to kind of leave your job completely if you're working on something on the side and, kind of give up that security of a full-time job. I would say that some inflection point where you think that your product is kind of a good idea and also is taking off in the market that you are targeting, there is some inflection point where the more you find working on your product, the more time you realize that is being taken away from your day job. And I think that that is a good metric where if you find that you're kind of doing more in terms of working on the project that you're really passionate and interested about, then um, than your actual day job, then it is time to really think about going full time into that. Just because at that point, if your project is really requiring that much amount of time in order to scale or grow, that's the amount of time that you really need to be putting in order for that project to kind of grow further. Um, and that can come at the expense of, holding down a secure job. But in this kind of day and age where some people don't have that problem in terms of having having something being tied down or having something tying them down, um, going all in is kind of the reality, and which can prove to be actually a positive. One last thing I do want to add is that entering things like an accelerator or using grants can actually be a really good incentive because there is structure to accelerators, to programs that funds kind of put on from the very start in the pre-seed stage or even the idea stage. And it can kind of be a good guide in terms of what steps and how much time to be putting into your project, into your next startup.
Fantastic. And from investor perspective, would an investor likely to invest in the part-time founders or full-time founders? How do you think they should approach that?
Well, that's a really good question. I think generally investors would like to see people being full time into their project because it signals two things, right? The first thing is that, again, in order for a project to actually grow and scale into a startup, into a business, you do need to put time and effort and attention to it. Startups are hard. Starting a startup is difficult. And if there is not enough time in the day that these entrepreneurs are putting in their attention and thought into these startups, they are gonna fail. Challenges are not gonna be overcome if you're just halfway in. The second thing is investors like to see commitment. They like to see passion, and nobody wants to be investing in somebody who's half in and half out of a project. That's just not where you want to put your money in as an investor. And so for those two reasons, and there are a myriad of other reasons, these are the two main reasons that investors probably want to see at a certain point an entrepreneur really just commit to their startup and to their project.
And my question to the founders who are watching this video, would you invest in startups with founders who are part-time? Or the other part of the question, would you believe in the relationship between a couple or within a couple if they are part-time? I don't know how it would work, but it seems like it won't, right? So just share your opinions here in the comments, and it would be interesting to know some debate, because some founders are working part-time, but do they really get this at a full speed or not? Will they get interest from investors with this or not? So it's a very interesting question, because I have never seen, I haven't seen many founders succeeding at part-time, to be honest. Fantastic. And I have a final question to you, Sharon.
Sure.
Many founders are asking, should I really worry about IP, if at all? And I have trademark. Should I do a trademark? Maybe I have some code to assign to a company, or maybe some small patent on the code, or maybe some product patent. So when do I need to worry about that, or should I worry about that at all?
This is an overall question about defensibility of the project and the product that you're pushing out. I would say a lot of software companies that we see, um, because AI is so um, pro prolific in terms of proliferative, actually is the right word. Um, Having an IP surrounding your algorithm is less and less common just because it's less and less useful. People are better at building algorithms. It's becoming more of a product, commoditized product than anything else. So any sort of advantage that you have doesn't necessarily come from your algorithm. And so that's becoming less of a attention, a focal point for people to use IP or to think about IP in that sense. I will say that if you are in hardware or biotech, life sciences, IP becomes more and more important in terms of defending your product. And so once you have a technology, especially in the life sciences, and you are typically going to publish a paper in terms of showing that the tech that you come out with, it works, that is also time to think about protecting your work and protecting that with an IP. And similarly with hardware as well. You do want to kind of use patents in order to kind of hold on to your technology such that other people who, might see the success that you might have in the near future and become fast followers can't kind of overtake you really, really quickly. That being said, IP is not everything, right? Companies that are big enough can buy you up and they can buy IP ownerships. But with that being said, that can be an advantage point of you being acquired. So as an exit, if your IP is strong and a larger company wants it enough, then they will buy your company just for the IP or for the license of the IP. So that can become actually a leverage point for you. And definitely very important for hardware and biotech life sciences companies that we've seen over here at Tau.
This is going to be a series of talks with Sharon, and Tau Ventures is good friends of Go Global World, and they participate in our Pitch to Global Investors. This very well-known global program for fundraising from founders from around the world with investors from around the world. And if you want to be part of of this program and meet Tau Ventures and other global investors, just feel free to go on our website, goglobal.world, and apply to the program. It will help you to stand in front of top-tier investors from our network and get funded. Thank you so much, Sharon.
Thanks, Daniel. Thanks for having me.
All right, bye everyone, and put your questions here in the chat, and don't forget about likes, subscription, and of course, tell everyone about this talk. Maybe it will help other entrepreneurs.